If you're planning on buying a house in 2025, one of the things that you have to know how to do is you have to know how to calculate your monthly mortgage payment. So what we need to calculate is we need to calculate our PITI, our PITNI, our principal, interest, taxes, insurances, and maybe even HOA, depending on if you're buying a property that's a condo, a townhouse, or a house that's in a planned development. So to figure out our principal and interest, what we're going to do is we need to know about how much we're covering for a down payment, what our purchase price is that we're trying to get maybe qualified for, and we need to do that math. Now, really easy way to do that is to make sure you go to my website, shameless plug, myownmortgageloan.com. You can price out your own mortgage and see in full transparency all the interest rates that you qualify for. Because if you look out there online, you'll see anywhere from probably a 6% up to a 7.5% on interest, but that's going to make a big difference. So let's try to nail it down. Let's get it a little bit closer so we can make sure we know exactly what that payment's going to be. So on my website, just put in all your qualifications. You can see the exact interest rate that you qualify for. Then for our taxes, what you're going to do is you're going to go on to a couple different websites. You're going to go on to either a county website or you're going to look up something like a Zillow, Realtor.com. You're going to go find an address that you're interested in and you're going to look at what the previous tax bills were. Then take that tax bill, divide it by 12. That's your monthly payment. Then for insurance, let's say you have a house that you're very interested in. You need to talk to an insurance agent because depending on where you live, the condition of the property, how old it is, that insurance payment can be completely different. Where I'm at in Arizona, my insurance is about $120 a month for my house. My exact same house, if you pick it up, move it, put it in Florida, is going to be about $300 a month. And in that matter, same thing on taxes. My taxes are about $150 a month. Pick it up, move it, put it in Florida, you're going to be paying about $400 a month in taxes. Then underneath insurance, we're also talking about mortgage insurance too. On a conventional loan, if you're putting less than 20% down, or if you're getting an FHA loan, you're going to have mortgage insurance to add to that. This is maybe going to sound biased, but me as a broker, honestly, mortgage insurance isn't that bad. For a lot of people, it only ends up being like $50 to $200 a month. And if that's the difference between you buying a house and owning a home and building equity in that instead of renting versus not buying a home, to me, it makes sense to actually buy. Then the last thing, HOA. With your HOA, you really need to be particular here. Because with some properties, I've seen anywhere from an HOA of $20 a month all the way up to, holy crap. So of course, that's going to make a big difference on your monthly payment. So no matter who you're working with, make sure you have an idea about what your mortgage payment is going to be ahead of time. Because something that I see all the time is somebody just talks with a lender. The lender says you're pre-approved for this amount. They get under contract for that amount, and then they're shocked at the payment, and they have no idea how it even got that high. So you have to make sure that you're actually calculating the payment so you know what to expect. Thanks for watching.